All right. So as we let the rest of the attendees trickle into the room, we'll get going. So in this session, I wanted to really go through what's happened with the US dollar and point out just how easy it is to let our psychology throw us off the track. I've always been mentioning this to you guys and girls about how important the mind is and how your mind will throw you off track really quickly. And this US dollar analysis that I did is a perfect example of that. And it's not until after you realize what ends up happening with price that you realize what went wrong. And that's the key thing about being a trader, because so often I see traders who focus so much of their time and energy on trading a system, and what ends up happening is they put the responsibility on the system to make them profits. Okay. And it's easy to do that because when you take a losing trade, what do? You say, oh, it wasn't me, it was the system. Because this is, what we've all been taught. This is a numbers game, right? Some you're going to win, some you're going to lose. So if you lose on a trade, then what happens? You don't have to take the responsibility for it because it wasn't you that lost. It was the trading system. And if you do that, if you have that type of mentality, then what's going to end up happening is years will pass and you're not going to accumulate a lot of experience with understanding the markets because you're going to be so focused on thinking that you lost on that trade because the system was just playing the numbers and this just happened to be one of those trades that were a loser, and not focusing on what it is that you could have done differently with your analysis. Because as far as I see it, it all comes down to your analysis. You make money because you're either right or you're wrong, period. And sure, there's some systems out there that you can trade and they're going to be a numbers game for you. Some will win, some will lose. But if you want to trade like that, then by all means, do so. But 5-6 years down the road from now, when you blow up your account, don't be surprised because it's going to happen. I mean, on this latest journal entry I posted on the website, I was talking about this guy. I'm not going to mention any names because I don't want to bring anybody's names into it, but I know a professional trader who manages millions of dollars. Millions of dollars. I used to have money invested with this guy a long time ago, and he used to live not too far away from where I used to live. And the guy was an excellent trader. And when I was watching how he trades, I said to myself, okay, this guy's good now, but I mean, that's because price is doing a very specific thing. It's very much in a range bound. And okay, it's going to work out for him really well, but if this reverses, which is what I know is going to happen, this guy's going to get himself caught. And so, yeah, for the last 5-6 years, he's had a great track record. And right now, he's 60% in drawdown. Okay? 60% in drawdown. And he has millions of dollars of clients' money. Now, I don't know about you, but if I had $1 million and somebody lost me $600,000 of it, I'd be pretty pissed. And I don't know how this guy sleeps at night with that type of a drawdown. But you see this time and time again. And you think to yourself, how is it possible that this guy's been trading for so many years and yet was not able to realize that this was going to happen with this currency pair and he was going to get himself into big trouble? And the reason being is because they don't put the onus on themselves to recognize that they are the one responsible for the analysis. And if they get it wrong, they have to figure out why. So this session is going to be an example of how I delve into the markets to understand what went wrong if I ended up doing some wrong analysis. Okay, and I did some wrong analysis, and it was on the US dollar, on the dollar index. Okay, so I'm going to break down what it was that I saw with the US dollar, and what I got right, and what I got wrong, and where I went wrong. And then we're going to look into what exactly I missed, okay? And how important it is to always keep your mindset aligned with reality, okay? Being objective is the most important thing in trading. Okay, one of the most important things is being objective, because the second you become subjective, you start to see what you want to see, and then your brain starts playing tricks on you. Okay, so that's what this session is about. Okay, it's about making this a learning experience to dissect what actually took place and what was playing out in my mind at the same time. Because let me tell you something, this has been a big learning experience. I do not like to get my analysis wrong. Okay, I do not like it. I take it very personal, and I take it so personal that I do nothing but analyze the markets and concentrate on what took place and break it down as far as I can to understand exactly what I did wrong. And when I realize what I did wrong, that's when I let up off myself and say, okay, now I'm happy with the fact that I made this mistake because I learned something big from it. And the bottom line is I didn't lose any money on this because I didn't have any trades on the US dollar. Okay, I did a webinar not too long ago, and I was talking about how to put the odds in your favor in knowing the direction that price is going to take. And I said very clearly that right now is not a good time to trade this US dollar, and that we had to wait for one of two doors to open up. So those two doors, if you remember correctly, were here. Okay, this was the demand door here, and the supply door was right here on the weekly supply zone here. I said we can't trade right now because there's like two ways that price is going to go. It's either going to go below this demand zone here, or it's going to go above this supply zone. And trying to decide what direction it's going to take is, it's difficult to do that. So to put the odds in your favor, you have to either wait for the demand to be taken out or for the weekly supply to be taken out. Okay, and in this case, I said if weekly supply gets taken out, then we know price wants to go up. If the demand gets taken out, then we know that price wants to go down. Okay, but with my trading, I've always wanted to get to a point where I was able to predict the direction price was going to take when it was stuck in between two areas. So if you remember that drawing that I made in that webinar, where we are in a room and there's a person in the middle of the room, and you got a door on one side and a door on the other side, and what direction does that person take? I'm the type of trader that wants to know what direction he's going to take and what door he's going to open. Okay, that's just how I am. That's just how my brain works. And so I've always been focused on analyzing the charts and getting to a level where I will be able to predict what direction price is going to take. And so in this circumstance, I was looking at the evidence here, and I thought that price was going to drop from this weekly area of supply. And we all know that what ended up happening was weekly area of supply got taken out and price moved to the upside. So let's take a look first at what I got right with the analysis. Okay, like if we take a look here at the monthly chart, price dropped from a 3-month area of supply right here, and I called this drop right at this top right here. Came down, and I've had this zone drawn out for I don't know how long now, a year and a half or so, and I had this written here, reversal from here. As we can see, price fell short of it. Why did price fall short of it? Well, because if you take a look at the euro, price came and hit this monthly area of supply, okay, with the 6-month trend line down here. So reacted to that and pushed price down, and the US dollar just followed suit. Okay, so let's follow along here, because if you look at the higher time frame charts, there's something playing out here. Okay, when you look at the higher time frame charts, there's something on a grand scheme that's playing out here. Okay, so what's playing out here is this. Excuse me. So we have an ascending trend line here. Okay, and as you can see, and this is an ascending trend line on a higher time frame. 3 months actually. Let me take a sip of my water. So on a higher time frame, what we have playing out here is a move to the upside. Price wants to move to the upside. And so we have price moving like this, up, down, made a higher high, and came moving down towards this trend line. Now, the reason why I knew price was going to reverse from here was a couple things. First of all, it was aligned with the same monthly supply zone on the euro, which price eventually moved down from. Okay, I was just thinking that price was going to make its move all the way down and test into that monthly area of demand, just like the euro did on the monthly supply. But you could see it fell short of it. And what's happening now is the force of prices is reversing and starting to move to the upside, because the eventual plan is to get price up here. Okay, I know that because if you look at the higher time frame charts, this is what is playing out. All right, price came up and is dropping from this CP supply zone. And what do we know for CP supply zones? What do we know about CP supply zones? They are basically speed bumps or little roadblocks on the way for price to make a bigger move to the upside. So price responds to these speed bumps or roadblocks, drops, and then reverses and starts to head back up. That's why I have price targets here at 115, okay? Because the higher time frame charts are dictating that. So I knew that price was going to be reversing from this, okay? We've always had a big picture view that the US dollar is going to get stronger. Regardless of fundamentals, regardless of the economic news, regardless of all that stuff, as you know, that stuff means nothing to me. Absolutely nothing to me, okay? And a lot of people ask me, why don't you take the fundamentals into consideration? I'll give you one clear answer, okay? Here's the number one reason why I don't take fundamentals into consideration. Because for years I used software called Forex Tester, okay? And Forex Tester is basically software that allows you to go load up any charts, any currency pair, and go back in time to, let's say, January 1st, 1995. And you type that into the software, and price will take you right back. The charts will go right back to that date and not show you any of the history that comes after it. All right. So you're at January 1st, 1995, for instance, and there's no bars in front of it. And every time you press the space bar, a bar appears. And so I have my monthly chart, weekly chart, daily chart, and 4-hour chart. And every time you press a space bar, a bar appears. And it could be a 4-hour bar that appears, or a daily bar, or a weekly bar. And let me tell you, I've spent countless hours using this software to test out how supply and demand works. Okay? Once I had an understanding of how supply and demand works and how price moves from one location to the next location and how it responds to CP supply zones and what is usually required to cause price to reverse and move to the upside. Once I had a good understanding of that, I said to myself, okay, well, it's easy to see after the fact, right? It's easy to see a chart like this and say, yeah, I would have went long here, and I would have went short here, and I would have went long here and short here. You know what? That's what other people do, okay? And you're just tricking yourself when you do that. You don't go anywhere, all right? Yeah, you're right. I got to pour my tea. Thank you for mentioning that. So, you are tricking yourself when you do that, and you're doing yourself a disservice because you're not going to learn anything that way. So what I did was I used this Forex Tester software, and I went back through time and I said, okay, let's see how supply and demand theory works. Let's set up some trades and trade as if this was happening live. But the only difference is I could go through years of time and years of data through months. Okay, so instead of taking years to learn what price would do within years, it took me months. All right. So guess what I found? I found that price responded to the understanding of market dynamics that I had gathered precisely. Okay, I was able to determine, hey, price is coming down to this area of demand. It's going to reverse and move to the upside. And guess what? It happened. And you know what was funny? No matter what year that happened in, 1995, 98, 2001, 2007, it happened. And you know what? I had no clue what was happening with the fundamentals. Okay, I didn't know if there was any announcements or if there was any economic data that came out or if there was an increase in the interest rate. I had absolutely no knowledge of that. Okay, so just remember that if you have absolutely no knowledge of what's happening in the world at those times, then how is it that if you use Forex Tester and you understand market dynamics and supply and demand and how price moves from one location to the next location, how is it that you can consistently get the moves correct if your analysis is correct? The thing is, the only reason you can do that is if you understand market dynamics and how price gets from one location to another location. And the bottom line is, fundamentals mean nothing, absolutely zero. And I know that sounds absolutely crazy because our minds have been programmed to think, well, everything has to have meaning. Things don't go up unless there's a reason for it. Well, as you've come to learn, there is a reason. It's because the banks are moving it. That's the bottom line. All right. So the understanding has always been that price was going to reverse from these areas and start heading towards this area here. Okay. So I said, bigger picture, the move is to the upside. But at this time, what ended up happening was, on the weekly chart, price came into some consolidation. And what's consolidation? It's when there is no longer a trend that's being held, right? This was a downward trend, a descending trend structure that was being held here, okay? And was being held right up until this point, until it broke to the upside. All right. And at this time, I was looking at this area of supply that was taken out, and I had this area of supply that was taken out. So I said, okay, 2 areas of supply have been taken out. Price is moving to the upside. This descending trend structure has been broken, and now price is in consolidation. Now, the thing is, if you remember, I did a webinar. I have a video lesson right here. Let me point it out. On the members section. I hope you guys remember this one. Under the trading video library, do you remember I did a session here called Trends and Trend Lines? Okay. In this video session here, Trends and Trend Lines, I was going into detail about when is a trend broken. Okay. And if you remember, let's just go back to that quickly. If you remember what I was talking about, I said if you have a move like this, okay, if price is coming up, heads down, comes back up, and then it is from here where the institutions decide to push price from here to here, okay, that is the original spot where the institutions decide that they want to stop the momentum to the upside and bring it down to here. This is a key pivotal spot, right? And I've said that when price comes up like here, even if it breaks this peak here, it doesn't necessarily mean it's an upward trend, even though you can draw a trend line like that. You remember that, guys and girls? Remember I told you that? Because I said, you know, we could be tricked into thinking it's an uptrend because you have a low here and then a higher high, and then you can, you know, connect the trend line. And, you know, visually it looks like we're in an uptrend. Okay, but do you remember what I said? I said, if you have an area here, and this was the area where the institutions caused price to move down from this peak all the way down to here, what did I tell you? Once that area gets taken out, that means the trend is to the upside. They are changing the direction of the trend, all right? Okay? And it's only when this area gets respected and price continues that even if there is another trend line like that, price is in consolidation because it has not removed that key pivotal spot where they decided to push price down. Okay, you following me? You guys remember this in that webinar? Give me a yes if you do, because I need to make sure you guys remember that. That's for the members. Okay, good. Okay, so remember what I just said here. Okay, now let's close this off. All right. Let's enlarge this chart here. Okay. Now you remember what I just drew? All right. Was there not a trend line here? A drop, a base, a rally, a base, a drop. Was there not a trend line here? There was, right? Okay. Now, here's one of the tricky things. Because at this peak here, there was not a supply zone. Okay? But let's take a look here. You see what I'm drawing here? An imaginary zone. All right? From the peak there all the way across. Right? Because wasn't there a big move to the upside like this? Right? Here, let me zoom out so you can take a look. Take a look here, guys. Down, came up, it removed a supply zone. Momentum to the upside. What changed the momentum from going to the upside after removing a supply zone to pushing price to the downside? Something or somebody made that change, right? What do you think it was? Obviously the institutions, because we retail traders don't have the power to push price down like that. So this was a key pivotal spot, right? Wouldn't you agree? A key pivotal spot where the momentum shift from the upside back to the downside. So let's take a look here now. So we have this trend now. Price came up, made a new low, created a trend line, and price was bouncing up against this, right? And we were saying that the institutions were just accumulating a long position and eventually they were going to push it to the upside. So what happened here? Okay. As price was moving to the side and ranging, what's the key thing that happened here? The institutions took out this area. All right. And based on my previous webinar, I said that these key areas where they reverse price, once it's taken out, price is no longer in consolidation. They're shifting the momentum to the upside. Okay, so take a look right here. They took out that area. And guess what? Guess what they used to take out that area? I'll show you. Let's just break it down to the daily chart. Guess what they used to take out that area? Right here. Okay. Because that area on the weekly comes in at around a little bit lower than that, actually. It comes in at around like this. Okay. So on the daily, this is what happened. Price came up into that weekly area, that resistance area. That was actually a daily area of supply, not a weekly, but a daily. But that weekly turning point where the institutions pushed price down was taken out by this zone here. Right here. Oops. Okay, this was the zone. And what did the institutions do? After they removed that turning point, look at that. They pushed price back down, filled in the rest of their orders, and boom, to the upside. Just like that. Okay, so you guys see that? You see that very key piece of information that was completely lost that we should have been able to see? Yeah, well, that's what happens at the beginning. We all miss a lot, okay? I've been doing this for many years, and you can see I've missed it. But let me tell you why I missed it, because this is the key point here. I shouldn't have missed this, all right? I shouldn't have missed it. You know, I look back now, and I'm like, how is it that I missed that? That's just, you know, I've been doing this for long enough to know better than this. How is it that I missed it? Well, there's a couple of reasons why I missed it, okay? So let me explain to you. So a couple of reasons why I missed it was, number one, this. Because I'm so used to seeing these areas as supply. Because 95% of the times when we have an area reversing like this, there would be a supply zone left behind there, okay? In this situation, there wasn't, okay? So my brain wasn't even focused on this area because there wasn't an area of supply. But what I should have done, and believe me, what I will do in the future, next time I see a scenario like this playing out, when I don't have a zone there, I'm definitely going to make some type of a marker or line or something there saying this is a key turning point that the institutions stopped the momentum moving to the upside and decided to move it to the downside. Okay? To have a visual reminder. Because, you know, once you don't put a reminder there and you don't focus your energy on this area, it just falls into obscurity and then you don't even remember it. Okay? Now, let me go into another thing that was wrong. All right, let me bring you this view of this chart. This is a weekly chart and it's zoomed out so you can see the analysis that I have done here. Okay, so let me point out another thing that I noticed. Okay, so with my software, as you can see, I have these zones drawn out. Some are in green, some are in brown, some are in like this reddish color. And the reason for that, as most of you know, is the green are the demand zones of the institutions and the red are the supply zones of the institutions. And when they get broken through, I leave them there on my charts, but I color them as brown. The reason being is because I want to remember the significance of those zones. Like I want to remember the significance of this supply zone by leaving the zones that it was responsible for removing. Okay, I want to know what this zone was responsible for, and I want it to be a visual reminder on my charts so that when price comes up to it, I know the significance of that zone being taken out or being respected. Okay, so here's the deal. When I turn these zones into, let's say this one here, you see the zone here? You see how it's yellow? Okay, when I turn this zone into a yellow zone, it's a reminder for me to understand that this wasn't an actual zone as we have coined the term or applied it to a certain meaning. This is not a zone, it's a demand imbalance. And members of the service know the difference between a demand imbalance and a demand zone. And there's two very different definitions for the two. And it's key to understand the difference, because if you don't, you're going to make mistakes in your analysis, just like what happened with here. Now, the tool that I use to change the color of the zone, what will end up happening is I'll change it into yellow, and then somewhere down the line when I do my analysis and I draw new zones, it'll end up reverting back to a brown. And I gotta find a way to change my indicator so it doesn't do that, because it has caused problems, and it's caused a problem with this analysis. So this was originally drawn out as a yellow zone, meaning it was a demand imbalance and not a demand zone. And what ended up happening was it turned back into brown. And so when I analyze a chart, I just assumed that was a zone and not a demand imbalance. And why is that important? Well, it is important because you have to know when a zone is being taken out or an imbalance is taken out, because it makes a difference as to what it creates. Does it create a supply imbalance or does it create a supply zone? So there was a couple mistakes here. Now, let me go through it, okay? Upon examining this weekly area of imbalance here, I was able to determine that it was not a demand zone, but it was a demand imbalance, okay? And when I took a look at this area here, I left this on my charts just to point out, okay? I left this here. This was always on my charts, this area. And this, according to how I understand supply and demand, is not a demand zone. But for some reason, I had it drawn on my charts, okay? And one thing I've always been very proud of is I've always created such a regimen that, you know, when I do my analysis, I'm always double and triple checking my work, okay? Because when I drew these zones, this was back in April 2016, okay? And my knowledge from April 2016 to April 2017 and April 2018 has changed dramatically. Why? Well, number one, because I'm not trading a system and letting the system make my mistakes. I'm trading based off of my analysis, and if I make a mistake, I go into it to understand what it was that I missed in my analysis. So in 2 years, my trading has become a lot better, and my analysis has become a lot better. So when price eventually gets to a point where it is interacting with the zone that I had drawn a year ago or 2 years ago, I always make it a point to go back and reanalyze those areas to make sure that I'm applying what I understand of the markets today to what I drew back in time. And I don't know if it's, you know, being busy with running the service. I think that plays a role into it, but whatever the case may be, something made me not go back into time and to look at these zones that I had drawn. Okay, something made me think that what I had drawn was correct and I should just take it as is and not to double check it. And I think it might have been 1 or 2 times that my brain thought that. And then what ended up happening was I satisfied my need or my want to go back and check it by giving myself the excuse that these zones were fine. And that belief turned into those zones are fine. And I don't have to double check it because I know them to be a fact that they're fine. And so, I mean, because now I look back and I'm looking at these areas, I'm like, why did I draw that as a demand zone? That wasn't a demand zone. According to my rules, that is not a demand zone. And I'm like, well, that was important to know because if this is not a demand zone here, and this is a demand imbalance right below it, then this area of supply here that I have drawn is not supply. What does that end up being? That means that this here is not demand. Okay? Which means this here is not supply. Okay? You with me here? So if this here is not supply, then that means this here is only demand because it took out this trend line. Okay? We have another area of supply here, but a lot of funny business happened with my broker here. When I look online at TradingView, this move up did not remove this area of supply, but on my charts it did. On TradingView, it's this area here that removed this area of supply. So regardless, this is a demand zone. I know that to be correct. But I know that it's not demand because it removed this area. I know that to be a fact. All right? But my whole perspective was that this area had been taken out by here. This is valid because of that zone being taken out and the trend line here. And then price came up here, and this was the next area of supply. Okay? So the trend was broken by the move to the upside, which put price into consolidation. And then it hit the next area of supply. And so my mind was telling me price was in consolidation. It's hitting the opposing supply. And it's already taken out one zone here by this area, putting price into consolidation. And now it's responding to the opposing zone, which means price is in consolidation. And was that true? Was that exactly what was in play? No, this zone wasn't taken out. Price had broken through the area where the institutions changed the momentum to the downside, right here. Okay? Force of price was to the upside. So, looking at all this, I now look back and I'm like, oh boy, you know, this was broken. You know, you're looking at the COT data. The COT data shows you that they're still very, they were still very aggressive with their short positions. You take a look at the euro, and they were extremely aggressive with their long positions. So I started focusing too much on the data, missing these key points, this breaking, this not even being a valid area, that this was most likely broken from here. And putting all these pieces together gave me the wrong analysis. Okay? I see price responding to here, not paying attention to this was taken out. And then my mind saying, well, if they're very long and very aggressive euro, I mean, they're not going to just drop price with being such an aggressive position. And then next thing you know, my mind is thinking price is going to drop. And then being so convinced that that's going to happen that I start looking at the data and seeing what I want to see. Okay? As opposed to seeing the reality. And if, you know, this will happen to you. Okay? And this is not something that you should feel ashamed of. All right? Because, you know, if you think about it, since day one when you go to school, you go into class and the teachers teach you something, and then you have an examination, and then what happens? Right? You do a test. Do you get any scores for getting things wrong? No, you don't. You get punished. If you don't get the answers right, you don't go to the next level, right? Or people make fun of you because you got bad grades. But in reality, if you want to learn from anything, you have to fail. You have to make mistakes. And then these mistakes is what you look back at, and you realize where you went wrong and you fix it. So you don't make the same mistakes over and over again. So does this upset me that this is what ended up happening with me? Not noticing these key things, okay? Realizing that price should have gone through this area no problem, because this wasn't even an area of supply. I mean, let's take a look at the daily chart to see what took place in these areas here, okay? Yeah, price fell short within hitting this area, hit this area, but hardly got to move to the upside. But this was the key spot here, right here. This should have been our entry long, okay? This was our entry long right here. We should have been getting in long. That's the bottom line. That's what was missed here, okay? Bottom line is we should have been looking at the chart saying, okay, they took out the area where the institutions were reversing price to the downside. They took it out with that daily area, okay? Right here. The zone broke the tops here, and then price dropped into that area of demand. And boom, to the upside. What were they doing as they were coasting sideways at this weekly area of supply? Right? What were they doing? Accumulating a long position. Okay. What were the banks doing with the euro? Accumulating a short position here. So regardless of what was happening with these longs, and regardless of what was happening with the shorts on the US dollar, my attention shouldn't have been focused on that. My attention should have been focused on what was in play here on the charts. Okay? If my attention was more focused on the fact that these highs got taken out, and this was an area where the institutions were reversing price, and a demand zone was responsible for it, I would have just gotten in there. Because at the end of the day, what happens on the charts dictates everything else. Dictates what you should be doing, because it's what the banks are doing. And then when it comes to the data, just learn from the experience. Because I'm really surprised right now. They're about to collapse the euro, and yet they're still very aggressive. Yes, they've dropped it from 236,000 down to 188. That's a massive drop, but they're still heavily short the euro, and they're about to collapse it. Yes, they're very aggressive with their short positions. 190,000. That's a good number, but I mean, look at the difference here. They're at the same. So when you look at the euro and you look at the weekly chart, if they're going to drop price here, do they want to be holding all those long positions? You would think that they don't, but am I going to make any assumptions right now with what they're going to do? Probably not a good idea, especially when the charts are dictating that a bigger move to the downside was going to take place, right? And do you remember the institutional trade signal to go short was right here? Okay. There was a signal right there. And why didn't I take it? Because I was interpreting the data and what was happening on the US dollar chart incorrectly. Bottom line, okay? And this was a perfect example. Like, this was a lot more clear. How did we all miss this? I think most of you have watched that that webinar, Trends and Trend Lines, right? And it's very clearly explained in that webinar that when we have a situation like this, look at this here. A move down, a move up, a move down. We had a trend line, right? Price reversed here by the institutions. They didn't want the momentum to go further. They reversed it. They caused it to move up, down, and then up, right? Isn't this a trend changing demand zone, right? And where did it get taken out? Right here. And what have I said so many times in those sessions? Remember I said we always have to watch for those trend changing demand and supply zones to be taken out, because the zone that takes them out is the zone that's going to be used to continue price to the downside. Isn't that what just happened here? I mean, this is like textbook, right? Textbook. So if this is so textbook, why was it missed? Right? Why is it missed? And see, this goes back to the mind and how the mind will fool you and trick you. So one of the beauties of creating a community of other traders where you are teaching them this system, this way of analyzing the charts, is that eventually you have more than one mind looking at the same thing through the same set of eyes. You know, different levels of experience, but everybody's looking for the same thing. And this is good because if my mindset isn't where it's supposed to be, and I'm not seeing something that's key, somebody else is supposed to see it. Somebody else out there who's, you know, being taught how to examine the charts in the same fashion, they should be looking at these charts objectively and say, hey, Kev, one point here. In that webinar you did, you said trend changing demand zone, when it gets taken out, whatever supply is responsible for it will be used by the institutions to cause price to move lower. Isn't that what's in play right now? Because, gosh, I would have loved if somebody sent me a message like that. And somehow it was just, I recognize that this was an area of supply for taking out the areas of demand, but somehow the importance of this was completely missed. And it's disappointing, really disappointing. But again, learning lesson, all right? Learning lesson. So let me take a sip of my tea because my throat is dry. Do you guys follow along? Do you guys see the mistakes I made here? So yeah, I made a mistake. But what I'm happy about is that I've recognized the mistake that was made. And I have to backtrack and try to remember how I got off the path. What led me off the path, okay? So this wasn't demand. This isn't demand. So these areas don't exist. Now that I've done this webinar, I can finally, I could leave that because that's an imbalance. Get this off of my chart. Okay. So this wasn't, and this wasn't. This is what the chart should have looked like. Okay. Price came down. This was already removed, and there was no other areas of weekly supply on the chart here. That's why this came up here like this without much to stop it. Look at that. Look at these green candles. Boom, 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 boom. What stopped it was this weekly area of supply. It slowed it down. Okay. And now we have this new weekly area of demand here. That's not the greatest formation. We don't have a good move away. And we have a lot of trading that came before this area here. But I want to take a look at this area closer, okay? So this here was July 29. So let's take a look at the US dollar in the July 29 area. And we can see July 30th, 40 to 41, not that much of an increase. August 7th, August 14 was the big move. August 14, which came within this big explosive candle up here. So not many shorts, or sorry, not many longs were being added in this area here. Throughout here, yes, but not in this area right here. So that makes this area quite questionable. Now, a lot of traders are waiting for a pullback right now to eventually get in long, right? And I think that's a good way to trade this. But I'll tell you right now, this area is not a good demand zone, okay? Because of these reasons, because of all this trading that came right before it, and this move to the upside wasn't decent. But the only thing that makes me believe that price is going to move like this is because of the importance of this area being taken out, okay? And now we are reacting from a daily area of supply, which is fueling the move to the downside. And what typically will happen is this will take place, okay? Bottom line is you look at the monthly chart. We were expecting a reversal from here. It fell short because the euro hit its monthly supply zone. And now price wants to come up here, okay? And what typically happens based on market dynamics, I'll tell you. Price will hit a monthly area of supply, drop into a weekly area of demand, and then continue to the upside. Okay, so when we look at the weekly area, this is the only weekly area of demand right now, right? But what do we have right above price? We have this area here. Weekly area of supply. So let me paint a picture for you, because this is something that could very much play out. Okay. We could get something like this, down, and then consolidate, and then like this, and then down, like this, and then into this area of supply, and then down into the weekly area of demand, and then taken out. Okay, this is what more likely than not is going to take place. Okay, just based on what I've witnessed with price over years and years and years of forward testing using Forex Tester. This is what typically happens. Okay, now it may not look this pretty, but this is the idea. All right, so so that's what it looks like to me on the monthly chart, is simply that, because we have higher time frame forces pushing price up. Okay, and what takes precedence? A 3-month trend line or a monthly supply zone that was only a reaction from the 3-month supply zone here. All right, so reaction from 3-month supply creating monthly supply. Price drops, hits the 3-month ascending trend line. Price is going to come up, hit that, respond, weekly demand, and push price up. That's what 9.5 times out of 10 will happen. Okay, so keep your eye on that. And that's why I am saying 115 price target on the US dollar, because market dynamics are suggesting that. And this has nothing to do with fundamentals. This has nothing to do with anything. In fact, if you guys remember, I did an interview with Dale, Forex Stop Hunter, on Twitter. And oil was, I think, around here or something like this. And I said that price was going to move all the way up here. And Dale was like, is that based on what's happening with Iraq and yada yada? And I said, no, it has nothing to do with that. It has to do with market dynamics. You take a look at the charts, and that's what's being suggested. And he said something to the nature of, I don't know about that. I don't think it's actually going to go up there. I said, well, if you take a look at the charts, there's that trend line from the higher time frame charts, and there's most likely going to be a reversal from that area. And so I thought there was a good chance that price could even get as high as here, right? But we know that this is aligned with the CAD, and we know that the CAD was expected to get weaker right at the same point that price was hitting this supply imbalance. So why did price get all the way up here? Did it have anything to do with Iraq and Iran and all that stuff? Absolutely zero. Nothing to do with it, okay? So, like, if you read the latest journal entry that I posted, I think it's a pretty decent one, if you guys get a chance. It talks about Mark Douglas and one of the sessions that he did. And he said that if you're the kind of person who likes to use their intellect to determine what's going to happen next, you're going to have a problem being a trader. Yes, I agree with that to some extent, and in other ways I don't. Because, you know, if you want to be intellectual and you want to think that if you can just grasp what's happening in the world and fundamentals and use that knowledge to make you a better trader, if you think that way, you're going to find yourself in trouble. Because at the end of the day, you don't know what the banks are up to. The banks can understand fundamentals better than you. But the thing that you have to understand here is that the banks trade with a very high time frame perspective. Okay, so this area here, that area was where price was going to reverse from. Okay, did it have anything to do with Trump becoming president or not becoming president? No, it didn't. But guess what happened when price was reversing from here? All the news came out and said that the dollar was plunging because of Trump and this and that. I mean, it's a complete joke. It was at least a complete joke to me, because I had this zone mapped out for a long time. Years. Years. And based on market dynamics, I knew that there was going to be a drop from this area. And so when the news came out and started saying, oh, it's dropping because of these reasons, I'm like, well, there you go again. And it's no wonder why most traders focus a lot of their attention on fundamentals, because it seems to be what causes price to move. All right? And I'm telling you it's not true. And if you want to prove to yourself, get Forex Tester software and do the same thing. Understand market dynamics, really learn why the market moves the way it does, and then apply that to charts without any future candles, and go candle by candle for yourself and spend countless hours doing the same thing as I have. And then you'll notice for yourself. You don't have to take my word for it, okay? I'm just telling you, okay? So that is what took place with the US dollar. Those were the things that I missed. And that was just completely amateurish on my behalf to have missed that. But again, you're going to see for yourself that your mind is going to play tricks on you. And then it'll slowly start leading you down a path where you'll completely forget. You know, all it takes is 1 or 2 times to say, no, that means there's no significance to this. And then you plant that idea in your head that there's no significance to this because you thought about it maybe once or twice. And then for weeks after that, your mind will say there is absolutely no significance with this point. Don't even bother looking at it. Okay? And then for weeks when you're doing your analysis, you won't even be paying attention to this area because you're so convinced that it has nothing to do with anything. Until after you realize the analysis was wrong, and then you realize, wait a minute, why did I think that when this area was taken out, demand was in play, and now forces to the upside? And there you go. That's what ends up happening. So let me take another sip. If you guys have any questions, please let me know. Let me check the private Twitter feed and see if you guys have any questions for me. Andy, let me see. How low do you see the Dixie pulling back to before the larger move up? Well, I'll tell you one thing. This is a really nice area, Andy. Right here. The 95 area, explosive. And let's take a look. Let's do something right here. It was responsible for removing that area. Okay, let's just extend this weekly area of supply. This is the key supply zone. This is the one that's important. Okay, why? Well, because let me see here. So it took out this area of demand. That was a trend-changing demand zone by the institutions, which means it's important. Okay, and I have this area drawn as demand, but now I gotta realize why. Let me see. Was this area? Oh yeah, I think that's the reason why. Yeah, because this was supply here. So it took out 2 areas of demand, and it took out a trend-changing area of demand. So that's important. So anything that takes that out is going to be key. And what took it out? This area here, right here. This daily area of demand was responsible for taking out that weekly area of supply. So it's probably, like, I'll tell you one thing. If this weekly chart didn't have all of this congestion here, like let's say price came up to this area, came down and had just these couple candles and then moved up and got 2 nice green explosive candles to the upside, consolidated away, and then dropped, I mean, I'd be loading up the truck on this area here. I'd be loading up the truck because this would be a perfect chart. Okay? But I'm currently doing some testing on areas that don't have proper consolidation away, that have a lot of trading before it, and how do they hold up when the momentum is pushing price in that same direction. And what I've come to learn, Andy, is that even though there isn't the proper consolidation away, even though there's a lot of trading before it, what will typically happen in circumstances like this is these areas will be respected. Okay. In other circumstances, these areas would not be respected. Price would drop right through here. The reason being is because Why this would be respected is because this is where the institutions are filling in their demand. Okay, so they fill in so much demand that it causes price to move up. They stop buying because they don't want to buy at high prices. And then eventually retail traders get stuck in long positions, price reverses back down, and they fill in the rest of their demand. And then they take the rest of their orders to the upside. But we spent weeks of them accumulating that long position. Okay, so if they spend weeks accumulating a long position, they move to the upside. Then the idea is that, if circumstances were different and not suggesting a bigger move to the upside, what would be the idea is that when price gets back down here, there is no more demand there from the institutions to fill. So if there's no demand there by the institutions, guess what happens? It gets taken out and price drops lower. Okay, so this is a bit tricky, but going based on historical charts and what I have taken note of in the past, what will happen here is, more likely than not, price will come down to this area between the 93s and 95s and reverse to the upside from here. And to support this idea, we have to look at the other charts, right? Because I don't want to just look at the US dollar and see this move happening and say, yeah, it's going to happen with 100% certainty. I want to see what the other charts look like. So let's take a look at gold. Excuse me. So price is reversing on gold too. And what does gold have? A nice weekly area of supply here. So if price does come up and break through this area, there's a nice weekly area of supply. Pretty much the same distance as the route that the US dollar has to travel to the downside. And I could definitely see that. That's very, very possible. Now, the only thing that, makes me think twice is this monthly bullish engulf. There's a lot of demand in here, and we don't know how much it could push things to the upside. Okay, so that's questionable. So now let's look at the Aussie. What do we see with the Aussie? Price is moving up towards this area of daily supply. But again, look at all the trading here. Okay, this is typically not a good scenario right before a supply zone, because it'll typically be taken out and price will move up. If you look at the weekly, there is no weekly supply here. We are reacting from a demand imbalance, and that's causing price to push to the upside. So that could easily be taken out and price travel up to this area. So the Aussie suggests that a bigger move to the upside could happen. Gold suggests that since we're reacting from here, a bigger move to the upside can happen. I mean, we know eventually it's going to go lower. I mean, the institutions are not going to create 4 areas of supply only for them to take them all out and push price to the upside. It's typically not going to happen. Okay, they're creating supply because they're forcing price to the downside. So let's look at the euro. Okay, so the euro took out this area of supply, and I mentioned on Twitter the other day that if this area gets taken out, we're going to get a move like this because it didn't consolidate away properly, and there was no 2-to-1 move away. But look, weekly area supply, and what came before it? A bunch of trading. Not good for a short, but considering the fact that market dynamics are suggesting a big push to the downside, and we can see the institutions are accumulating a big short position, it's more likely than not, when price gets up to these areas here, we're going to see a push to the downside. Okay, so it suggests that this is going to happen. I don't like the technicals very much on the weekly chart, but on the higher time frame charts, this is what's going to happen, a push to the downside. Okay, but what kind of worries me too is if you look at the euro, right? Look how many positions they have to the long, on the long side. All right, they're still aggressive, but I don't want that to taint my perspective on the technicals too much, because the next few months I'm going to have to learn how are the institutions going to manage this, because they're heavily long and they're heavily short. I mean, they're playing both sides right now. Why are they so aggressively long right now? This is not good for them. How are they going to get out of this position? Now, one of the things that I'm thinking is they could be holding this long position in preparation for a move to the upside from here. I mean, they have all the money. So they can hold positions as long as they want to. They don't have to necessarily be making huge profits on this move down. They're already well situated short and long, so they're basically hedging themselves with this drop to the downside. Okay, so what did I say? In circumstances like this, when price comes down to a monthly area of demand, it'll come up, hit weekly supply, and then drop lower. Okay, so excuse me. So let me see what's happening here. So we have this weekly area of demand here, which is good. So this is what can happen. Price can come up, respond to this trend line, to the weekly supply. They can push price down, consolidate, push price down into the monthly area of demand. New area of supply here. Price comes up, hits the supply zone. If that trend line still exists, it'll be aligned with the trend line, and then they'll push price lower. So I see that dynamic starting to play out here on the Euro chart, right? I see how it's setting up on the US dollar chart. So these two things are important. Let's look at the pound. So the pound, on the pound, pretty much something similar, right? We're coming down towards that monthly area of demand. We have demand here on the weekly chart. One's already been taken out. Now we're responding to this one right here. If price comes up, this is a nice area of weekly supply. You see the difference between the candles leading up to it here as opposed to the dollar and euro? This is better because if you look at this key area here, yes, we have these wicks here, which isn't so great, but we don't have all the candles like this, like on the euro and the US dollar. So this is a decent, this one score a little bit higher than the other ones, okay? So this looks good for a move like this and down, which would take out this area. They create some supply down to the demand. They can reverse it and drop it like this. That looks proper to me. So US dollar chart looks good when it comes to that. Euro looks good when it comes to that. And then what do we got? The Kiwi. Kiwi is reversing to the upside, as I was mentioning on Twitter. Daily area of demand up here. Nice area of supply nested within this weekly area of supply. And again, take a look at this. Not bad. Okay, not amazing, but not as bad as the other charts. Okay, just a few candles here and then the drop, taking out weekly demand. So it looks decent for a drop. So when you look at all these other charts, you're like, okay, so the euro looks not bad, it suggests it, but the zones aren't the greatest. But they are looking better on the Kiwi. They are looking better on the pound, right? The US dollar is not so good. But we're seeing a bigger move to the upside, right? What about the dollar pairs? What have we been saying, right? Dollar pairs, US CAD, hitting weekly demand. Based on market dynamics, what did I say would happen, right? Let me tell you, this is a perfect example of what I was saying to you. Based on market dynamics, higher time frame force is in control, trend line pushing price up, it's pushing up into a monthly area of supply, drops, and then responds to a weekly area of demand, and then price moves to the upside. So based on those market dynamics, this is supposed to go higher. Yes, it's dropping because of US dollar weakness and this trend line, but weekly area of demand is holding, dropping from monthly supply. So based on this dynamic, it supports that drop in the US dollar is going to drop to that weekly area of demand, and then we're going to see the reversal. Looking at the US dollar Japanese yen, it's the same principle, right? We have price responding to a descending monthly trend line. So we have that monthly force. It's not a monthly supply, but it's a monthly force, and it's pushing price to the downside into a weekly area of demand. Same concept. We have a higher time frame area of demand forcing price to the upside, right? It got respected, monthly area of demand, as a reaction to that 6-month area of demand. Push up, responding downwards into weekly demand. This is suggesting a bigger move to the upside. So, taking all that evidence into consideration, US dollar, more likely than not, is going to drop into this area, and then we're going to see a move to the upside. That's what all the evidence is pointing at right now. Okay. Any questions from any of the members or anybody? What time is it? 5 after 10. So was this session helpful to you guys? Do you see, or did you follow along? Did I lose you? So key. All right, you're going to make mistakes. And as members, what I want you guys to do is please, please, please send me your analysis. Watch the videos, learn, and apply what you're learning to the charts. And then send me your charts. Hardly any of you ever do that. And the ones that are doing that, you're learning a great deal, because I will invest my time and energy into you if you invest your time and energy into yourself. Okay? So do your analysis. Make mistakes. Look to make mistakes. You have to want to make mistakes. Do your analysis, make mistakes, and send them to me and say, where's my mistakes? Can you send me a chart of yours, or can you look at my zones? Can you look at my trend lines? Here's my analysis. What did I do wrong? And that's how you're going to learn, because then I'll point out, this is where you went wrong. This zone shouldn't be here. This is an imbalance, not a zone. And then you'll learn from it. And then you take those experiences and you apply it to the next chart. And then you send me those charts again. That's what I'm here for. This is how you're going to learn. Don't watch the videos and say, oh, I get it, because you don't get it. Okay? Everybody watch these videos, this video on trends and trend lines. Everybody watched it. At least the majority of you did. And when I do the webinars, I say, are you guys following along? And everybody says yes. But nobody spotted this, breaking that out. Nobody. Not one person said to me, hey, Kev, remember you said trend-changing demand zone? Isn't that what we have here, a trend-changing demand zone? And supply breaking it? And I know what probably, and if any of you did spot that, I know what you're probably thinking. I don't want to confront Kevin and say, hey, but isn't this taken out? Because maybe he's going to get offended. I'm not going to get offended. We're all here to learn, okay? I'm not a guru, all right? I just spend a lot of time studying stuff, but I don't get things perfect, all right? I'm a human being just like everybody else. I make mistakes. So you need to feel comfortable. Approach me and say, hey, didn't you say in this video that if this happens, this happens? Boom. I'll be like, thank you. I appreciate it. Good eye. You're learning. I'm learning. We can all learn from each other, okay? The key thing is that we're all on the same side. I'm trying to use all my countless hours that I spent locked up in my office studying stuff to make you better at what you do, so you could provide a good living for your families, okay? We're on the same team. So if you see something, you spot something, say, hey, Kev, man, I just noticed this, okay? Because we're all on the same team. I only get offended with stupidity. If you don't come at me with stupidity, I'm not going to be offended. You come at me with reality and with, proper etiquette, then I'm there, and I'll be very appreciative. Okay? So again, we're not perfect. We're going to make mistakes, but look forward to making mistakes. And don't ever think anybody or I am ever going to make you feel bad about yourself if you're making mistakes. Because the bottom line is nobody should make you feel bad about making mistakes. Okay, you're going to find fools on the internet who are going to be following you and watching your analysis and seeing that you're correct almost every single time. And they're going to be like, how the hell does this guy do this? I wish I could do something similar, but I can't. Somehow I just can't. So let me just follow this guy. Oh, he made a mistake. Oh, now I can point fingers at him. Now I don't have to sleep in my bed at night thinking that I'm a loser because I'm not spending my time learning how to trade. And now this guy's not so perfect, so let me point out one mistake that he made and say, ha ha, like he's a kid in grade 5. People like that, ignore them. And I've been told to ignore people like that. They piss me off because they don't recognize the amount of work that it takes to get things right. And then somebody makes a mistake and all of a sudden they're going to pounce on them like a schoolgirl. I mean, ridiculous. So anyways, I'm not perfect. You're not perfect. We're here to make mistakes, and we're here to learn from the mistakes, okay? We're here together. We work together. You guys are a great group. I opened up the door to a lot of different traders. A lot of guys who I follow and respect on Twitter are in this room right now, and I really appreciate that you guys are here and that you take the time out of your day to even listen to what I have to say. So if you got something from it, great. I know I learned from you guys. And let's continue doing so, okay? My voice is going. I can't even speak anymore. So I hope you guys enjoyed this session today. And let's get prepared, okay? Euro's going to collapse. So if you're going to open up a position blindly, it's to short the euro. That's the way to go, okay? So again, hope you enjoy the rest of your weekend. And I'll make this one available to everybody on YouTube. I'll be encoding it and posting it up there as soon as I can. Okay, ladies and gents, thanks for joining. Appreciate the support, and we'll see you out in the markets. Take care, guys.